Hey everybody, Joe Piszczor here, Certified Financial Planner with Washington Family Wealth here in Washington, Pennsylvania, and I wanted to bring everybody out a economic review and outlook for 2025 and 2026. So we're going to take a look at what the markets did in 2025, some of the economic trends that we saw, and what are the headlines leading into 2026 and what to keep our eye on. So without any further ado, I'm going to switch over to a presentation and we'll be back after we finish. All right, so let's get into our 2025 year-end review and our 2026 economic outlook. Remember, just a quick disclaimer, the opinions expressed in this are that of myself and the firm and are not to be taken as financial advice. However, if you do want to take action on some stuff, talk to your counselors. So whether it's us, your financial advisors, your tax or legal counselors, always good to check in with your team to make sure that things are in your best interest and all that. So without any further ado, let's see how markets did last year in 2025. So remarkable performance across all asset classes. I'm sure for those keeping up with their investment statements, they saw growth across the board, but we did benefit from diversification. So S&P 500 are large cap companies in the U.S., just shy of 18% for the year. Our Dow Jones Industrial Average, so our industrial and manufacturing leaders, just shy of 15%. International developed, and when we say international developed, we think of countries with strong, stable economies and well-established financial systems. Businesses are generally mature and regulated. Think like Japan, Germany, UK, France, Canada, Australia. Those are our, examples of that. They had a great year at just over 34%. And then with emerging markets, think of countries with growing economies that are still developing, little less stable. So we think of like China, India, Brazil, Mexico, South Africa. Those are our, emerging markets. They had a great year, just shy of 24 or just a little over 24.5%. When we look a little deeper into the U.S. market, U.S. small cap companies, so those with $5 billion in market cap or less, they had a great year, still at a little over 11.5%. So although international markets led the gains, we had broad-based positive returns across all equities or stocks in the market. For fixed income, we still had a productive year in fixed income or debt vehicles. So the aggregate bond index was just north of 7%. Government bonds were just shy of 6%, and solid diversification benefits. So by being diversified, we didn't lose too much on the fixed income or anything too much on the equity side. So very positive year for asset returns worldwide. When we look at the consumer, we have unprecedented financial strength. So the American household net worth reached $167 trillion by the second quarter of 2025, which is the strongest consumer balance sheet we've had in history. Since 2020, American households have gained $60 trillion in assets while adding only $4 trillion in debt. That's a 15-to-1 ratio, demonstrating a lot of wealth building going on. Much of that in their housing prices and their retirement account balances, but we certainly see a lot of growth in American households. So what's helped with that? So strong cash positions, deposit accounts across all income levels exceeded the 2019 levels adjusted for inflation. So people have more cash on hand. We have manageable debt service. So household debt payments as a percentage of their income, it's the lowest it's been since 1980. So with those increasing home prices, we would think, the debt service is higher, but not necessarily. And then lastly, we've seen inflation continue to moderate. So down from 2.9 to 2.7 year over year. And the Fed reducing rates 75 basis points this year. We've seen inflation continue to moderate. That doesn't mean that the inflation since COVID has gone away, though. So we can see it in our monthly grocery, gas, etc. budgets. Those prices are sticky where they're at, but the increase in those prices has slowed. We're not seeing 6, 7, 8% inflation year over year. So that's good to see. I wanted to show this chart from Visual Capitalist and the U.S. Census Bureau. So this is how income distribution has changed from 1974 to 2024. You may have seen an article we put out about a K-shaped economy, and this helps with that case here. So what we can see is that if we look at 1974, how income was distributed, and in 2024, we can see that the top earners, so those with household incomes in the 300s, the 140s, and the 80s, have either stayed relatively the same or maybe even lost a little bit. So more income is going to the higher income earners, and what that shows us is that there has been some upward mobility where people in the lower income levels are moving up, and more of that wealth is going there. Now, we do have wealth accumulation in the economy, so I don't want to pretend that, everything is perfectly even across the board, but we have seen many from that time period in the 70s that were maybe in the lower middle or middle class, if we want to call it that, moving toward the middle or upper middle class. So there is positive asset growth on many U.S. balance sheets throughout the past few decades. Let's talk about corporate America. So we've seen resilience as well as record profitability. For the U.S., real GDP growth reached approximately 2.6 in 2025. That's against some very heavy headwinds with concerns over tariffs, concerns over inflation, concerns over AI bubbles and other things. So it's good to see that the U.S. is chugging along with real GDP growth. We'll see what happens in the future. Also, profit margins on corporations hit a 15-year high. So when we look at S&P companies, they achieved a net profit margin of 13.1% in Q3. That's the highest it's been in 15 years. So exceptional profitability powered by 39 all-time new market highs. So lots of concerns out there, but the market and the takeaway point has remained resilient. So corporate America continues surprising experts with its ability to navigate challenges and expand profitability in very uncertain environments. Let's talk about the investment landscape. So diversification delivered. Broad-based positive returns like we talked about across most equity and if not all, bond classes. International markets led with outstanding gains. Bonds provided strong fixed income returns, so we're not, losing or not making much money by holding our bonds. And even small cap real estate, precious metals, our more volatile asset classes perform pretty darn well. Cash instruments, and this is a big conversation we have with our folks when we're doing planning, but the cash instruments are still delivering meaningful yields, right? Those FDIC insured checking or let's say savings, money markets, high yield savings, and CDs, we can still get pretty reasonable yields out of that, keeping your cash reserve up with inflation so you don't have to keep filling the bucket, so to speak. A lot better than a few years ago when we could maybe get 25 basis points or a little bit more out of your savings or CDs, etc. So definitely something to take advantage of, as well as keeping appropriate cash reserves on hand for, volatility or big purchases, etc. The precious metal story, I think it's interesting. So gold finally surpassed its inflation-adjusted high from 45 years ago. Silver hitting pretty high water marks as well, but still remaining below inflation-adjusted peaks and, not to rub it in, but if we took $1,000 invested in equities in 1980, it would have grown to over $170,000 now. So, powerful reminder of long-term equity exposure as well as diversification. Having a little bit of everything helps weather these storms that inevitably come up, because none of us have a crystal ball. Artificial intelligence was the year's defining theme. We've had no limit to conversations about the massive investment in artificial intelligence over the past so many years. And history suggests transformational technologies like this, and we think about the investment that went into railroads in the 1850s, the investment into electricity in the early 1900s, the investment in the internet from the 90s through the 2000s, right? They deliver lasting value despite periods of excess. So AI is already improving efficiency in corporations and innovation across industries, following a familiar pattern that bodes well for patient long-term investors. Although we may see some volatility in those sectors that might spill over into it. So just remaining diligent. All right, I like this one. So here's some reasons for big picture optimism. Global literacy is at an all-time high. Youth literacy in the developed world, like we talked about, the US, Japan, Germany, UK, France, Canada, Australia, has reached 93%, up from just 75% 50 years ago. So that's awesome to see. Combined with expanding internet access to 2 billion more people, this is going to unlock extraordinary human potential for decades ahead. Longevity science is having breakthroughs all the time. We've seen a bunch of research in calorie reduction, DNA modification, genetic programming. We've seen advancements in people treatments for Alzheimer's disease, cancers, etc. So science is finding keys to reversing the aging process, reducing our disease risk, and just giving us a better quality of life. And then lastly, unreported global progress. So record harvest despite shrinking farmland. Global unemployment is at 34-year lows. Just shy of 300 million people gained electricity. Nearly 1 billion have access to safe water. 1.5 billion have received basic hygiene. And this is all just in the past decade. So the quality of life globally, although we've had a lot of challenges, continues to progress forward. And that's something for all of us to be optimistic about. And progress is accelerating. So remember that all the miraculous progress occurring today rarely appears in your news feed, regardless of which side you may follow or what type of media you're tapping into. So yet it reveals a very important truth. Human advancement may be accelerating, not slowing down. And history demonstrates humanity's remarkable ability to solve seemingly impossible problems. Sometimes it brings out the best in us. And so this innate drive for improvement powers markets growth over decades and in my opinion, always will. And I want to have this quote: "We're witnessing problems being solved right in front of our eyes. This human desire for progress will drive markets ahead, just as it always had. That doesn't mean we won't have periods of volatility, but overall, we're moving the ball forward." All right, so that wraps up our economic review of 2025 and our outlook for 2026. A lot going on out there in the economic world, and certainly everybody's situation is different. So if you're a client of the firm, we certainly would like to see you here before tax time, just to make sure that we're getting you the right information to file your taxes. If you have any questions or if we need to coordinate with your accountants on tax strategies this year, we're certainly happy to do that. And just want to make sure we're seeing everybody and making progress toward your financial goals. So certainly appreciate everybody's business and hope that we have a prosperous 2026. If you have any questions or comments on these videos or outlooks, we would certainly appreciate that. But look forward to seeing everybody at your review meeting. And we'll talk to you here soon. I'm Joe Piszczor, Certified Financial Planner with Washington Family Wealth here in Washington, Pennsylvania. Take care.